U.S. markets kicked off June with solid gains, surprising many analysts who expected the turbulence amid escalating trade tensions between the United States and China. Instead, investor sentiment remained resilient, fueled by optimism in the tech sector and unexpectedly strong employment data. The Nasdaq Composite led the charge, officially returning to positive territory for 2025 after weeks of volatility. Driving this rebound was the semiconductor sector, with NVIDIA once again taking center stage. The chipmaker posted stronger than expected earnings and announced a new line of AI-optimized processors, reinforcing its role as a bellwether for tech performance. Shares surged nearly 8% in a single day, lifting sentiment across the sector. The S&P 500 and Dow Jones Industrial Average followed suit, both gaining around 1.2% on the first trading day of the month. This positive momentum came despite the announcement of new tariffs by the Biden administration on Chinese electric vehicles, batteries, and solar panels. Measures which were met with swift but relatively measured responses from Beijing. While economists warn of longer-term implications for global supply chains, investors seem more focused on the underlying strength of corporate earnings and consumer demand. Adding to the upbeat market mood was the May jobs report, which showed the U.S. economy added 275,000 new jobs, well above Wall Street estimates. The unemployment rate held steady at 3.9%, and wage growth remained modest, helping to calm inflation fears. Analysts interpreted the data as evidence that the U.S. labor market remains strong without signaling overheating, a Goldilocks scenario for equities. Several analysts cautioned that the rally could be fragile, especially if trade relations worsen or if the Federal Reserve shifts its tone on interest rates. However, for now, market participants appear to be betting that the tech-led growth will continue to outpace geopolitical and inflationary headwinds. Meanwhile, retail investors have re-entered the market in force, particularly through ETFs focused on AI, semiconductors, and renewable energy. Trading volumes in these sectors spiked nearly 20% compared to the prior week, according to data from Nasdaq. As of June 3rd, market confidence appears cautiously optimistic, bolstered by tech strength, solid jobs data, and the hope that trade spats will remain contained. With the Fed's next rate decision on the horizon and Q earnings season just weeks away, investors are preparing for more data-driven volatility. But for now, Wall Street is breathing a sigh of relief,